Stock market versus Eurobond, which is better right now? Welcome to Globefolio. If this is the first time you are visiting my channel, kindly hit the subscription button, turn on notification bell so that you will always get an update wherever I release time sensitive posts or video like this. Now, today I want to answer a question. One of my subscribers shared a question with me via WhatsApp, and he was like, "Should I invest the money I have in stock markets, that's Nigerian stock market, or should I do Eurobond?" That was after watching my previous video. So, and I will attempt to answer that question. Now, we already know what stock is. The stock market is all about where you're able to buy into shares of company, and then Eurobond are actually bonds that are issued in a currency other than your own country's currency. So because it's euro bond, it doesn't mean that it's actually going to be in euro. No, it's just a name tag to identify bonds that are issued in currency outside the issuing country's currency. So at this stage right now, if you have money and you're contemplating on whether to go for stock market or Eurobond. So I will attempt to answer the question with what is currently happening right now. So let's look at the chart of the Nigerian stock market. Now, this is Nigerian stock market. Now, notice how the market broke this important key level to reach a new all-time high. Now, see again that in the last 2 months, the market had been down. Currently, the market is down by 3.14%. Last month in June, the market went down by 3.39%. And this seems to be a reversal. So there seems to be a reversal in place. Now, if you look at the trend in the stock market in the last 2 months and coupled with what has happened in the global economy, and then as a response to CBN increase in interest rate, you will see that the market is actually due for correction. The market is due for correction, and that's what is happening right now. Because when the market rallies so high like this, it's normal for there to be pullback. Now, how long should we wait? What is the extent of this correction? That's exactly what I want to explain right now. The extent of correction we should be expecting in the market is going to be deeper, and it may come with surprise. Now, what I mean by surprise is that it's likely that the market may find support at this stage, which was previous resistance. You can see tested one, two, three, and the surprise may be that the market may broke this previous resistance, turn support to the downside. So if the market finds support right here, we might see a bigger rally. And if the market fails to find support at this point, then we should be seeing the market go down to 20,000 or 21,000 basis points. Why did you say that? The reason is very simple. Increase in interest rate, a rising interest rate is extremely bearish for stock market. And you see what is happening right now. Almost central banks of different countries are raising interest rates. And what is the implication? When you raise interest rates, the cost of borrowing becomes expensive. And when cost of borrowing becomes expensive, then it's going to tell on that company's finance cost. When you look at the company's financial statement, you will see that finance cost is one key area you should watch out for, because a company that is largely exposed to debt would see its finance cost rise. And when there's increase in interest rates, it means that your cost of borrowing is extremely expensive, and that is not good because it's going to eat deep into your profit. So what some companies do at that point is to be able to increase the price of their product to cover up. But to what extent are you going to increase the price of your product? Now, when you also look at inflation right now is already at all-time high, which is a threat. So that tells you that we should be seeing correction in Nigerian stock market. Another major factor that is also responsible for this is the strength in US dollar. You can see the strength that we've seen in dollar over time. As at the time I'm recording this video, dollar is already selling for 685 naira. Notice the huge spike. You can see the jump. As at January this year, let's go back to January just to confirm the price of the USD. So I'm going to take this back to my daily chart. Okay, so as at January 2022, you can see the dollar was selling around 564. It was around five. You can see around between 564, 565. So let's just say average of 560. So from 560 to a high of close to 685. So 685 minus 560. That's addition of 125 naira. So 125 divided by 560. It means dollar had appreciated by 22% between January and now. Now, when you look at the stock market, by what percentage had the stock market rallied between January and now? In January, the market opened at 42,716. Right now, the market is at 50,000. So 42,716 minus 50,000. This is just an estimate. So that's like 7,284. So the market has added 7,284, 17%. So the NSE market had rallied by 17% between January and now, but dollar had increased by 22%. What does that mean? It means that the dollar had outperformed the NSE market by 5%. So for someone that had invested in the NSE All Share Index, like assuming there's an ETF that tracks the NSE All Share Index, up till now, your portfolio would have increased by 70%. But if you had bought the dollar into your DOM account, your portfolio would have increased by 22%. What is happening right now? Is NSE market going to catch up, outperform the dollar? No, I don't think so. Simple reason: higher interest rates, increase in interest rates is bearish for stock market. So as central banks of different economy begins to raise rates, and we've seen that play out in Nigerian market, coupled with the fact that inflation is surging higher. And when inflation is surging higher, it's not also good for stock, because it's one of the reasons central banks will want to raise interest rates so that they can fight the surging inflation. The only thing I've seen here is that I've seen that central banks are doing wrongly is that you can't use interest rate to fight inflation when the reason for that inflation is not connected. Do you understand? When the reason for that inflation is not connected to the fact that more money are chasing few goods. So people will say inflation is when more money are chasing few goods. Then you can use interest rates to fight that. But that's not play out in Nigeria, because the kind of inflation we are actually experiencing right now is related to demand and supply. There's supply disruption. So it's like more or less like a demand-driven inflation. The demand for goods are so high that the supplies are not able to meet up. So naturally, the prices are actually going to increase. So that's a topic for another day. So what are we expecting? I'm anticipating the stock market to dip further. So it's possible, it's likely that by year end, the 17% rally that we have seen in the stock market might continue to go down. So we could see the market close positive in this year, but it's not going to be more than 15%. So if I want to be modest, the NSE market is not going to close more than 12, 13, 14% by the end of the year. And if you look at the Eurobond again, if you look at the dollar will likely be surging higher. Why is the dollar surging higher? First, carry trade. Investors are moving their money to region where interest on savings is a lot more attractive. The dollar had been gaining strength against major economies. So the strength of the dollar is not only connected to naira, but also global currencies. So it makes sense for you to invest in dollar or buy in dollars. And one of the best investments you can actually do in dollars is Eurobond. So if you look at the state of the market right now, it makes sense to buy Eurobond and cut your exposure in the stock market, especially if you're trading. But if you're investing, that might probably not be a cause of concern for you, because you're looking at a long-term investment. Market will always swing up and down in short term. But in the long run, as long as you're collecting dividend, as long as you're investing your dividend to grow your portfolio, you might still be well off. But if you're trading the stock market and you are contemplating on whether to put your money in Eurobond or to go for stock, I would advise you to allocate higher amounts of your money or capital to Eurobond right now, because the NSE market is not looking good. The market is looking at pulling. There's possibility that there will be pullback going forward, and that's not good for stock. Now, does it mean that there are stocks that are not available for trading? Does it mean that there are stocks that are not good for trading? Definitely, there will be stocks to trade. I'll be sharing some with you, but only that your frequency, the rate at which you buy and sell, the number of stocks that will be appreciating will be extremely limited. So when the market is going down like this, It doesn't mean that it's all the stocks in the market that are going down. What it means is that a larger portion, 90% of all the stocks or majority of all the stocks in the market are actually going down. Let me show you another strong proof that NSE is actually going to pull back. You didn't see this coming. If you watch this video, you are going to take swift decision. But if you miss this video, you may not see what I'm going to show you now. This is NSE All Share Index, which is the value of all the stocks in the market. If you look at Nigerian markets, you will see that there are few companies that are actually driving the index. There are few companies that are driving the market. There are average of, I think, between 150 200 stocks in the market. Out of the 150 200 stocks in the market, less than 30 stocks are actually driving the market, meaning that over 90% or 100% of stocks are low cap stock. So the reason is because the capital of this company, they are so huge. For example, look at Dangote Cement, look at MTN, Nestle, GTB, Zenith Bank. These are few blue chip companies that are actually driving the market. So what I always look at is, rather than paying more attention to NSE All Share Index, I rather pay attention to NGS 30 index, which is NGN 30 index is an index that tracks top 30 companies by market capitalization. That means these are top 30 companies that have the highest market capitalization. So top 30 is where you will see what is happening, because these are the companies that are driving the index. If this company go down, the overall market will go down. If this company is going up, the overall market will go up. So we want to pay more attention to NSE 30 index. So let's look at what is happening right now. Now see the chart clearly. See NGS 30, this is top 30. So why you might have thought that Nigerian stock, let me open it here, ASI, why you might have thought that Nigerian stock broke out into new high to reach a new all-time high. You may probably be wrong, because it may not be the NGS 30 stocks that broke into new high. The stocks that broke into new high may not be part of NGS 30 stocks. They may likely be penny stock. Can you see what I'm trying to open your eyes to right now, where the opportunities are in the market? So if you look at the overall market, look at how the market broke this region. It was tested once, second, and you can see third time pull back and broke out. Now, where is this breaking out coming from? Which stocks are actually responsible for this breakout? They are not in NSE 30 index. Majority of them are not in NSE 30 index. Few, only few of them, the few of them like Airtel, Okomu Oil, but majority of the stocks that led to this breakout were not in NSE 30 index. Look at NSE 30 index itself. You can see that NSE 30 index tested this high in July 14, and let's go back to this period again. You can see this was also the same period around July 14. The second time it tested this region again was in February 2018, between January February 2018, and the market again tested this region between January February 2018. Can you see? Now the third time it tested this important region right now, you can see that was May 2022. The third time the market tested this region, it broke out. So which means that it was not the NGS 30, it's not the NGS 30 that is responsible for this breakout that you're seeing here. Only few stocks were responsible for this breakout. NGS 30 itself has just formed a bearish pin bar. You can see the rejection at this point. So meaning that the NGS 30 is on track to going down to where it came from. And where is the possible support that we should be looking at? This region. So it may not happen this year, but if you look at the time the market rejects its all-time high to where it found support, is most times between 2 to 3 years. Between 2018 to 2020, 2 years. Between 2014 to 2016, 2 years. So the market might take 2 years for this market to dip from this high to this region, except we see an unusual event. except we see an unusual event that could make the market rally higher. So my projection is that NGX 30 stocks are on track to hitting their low in coming years. What are the opportunities in this particular bearish fall? It means that if you're going to be playing the stock market, you need to play the stock market more as an investor rather than a trader. Who is an investor? An investor is one that is looking for cash flow from dividend. So it means that most stocks are actually going to be extremely cheap as dividend stock. We are going to see dividend stocks offer as high as 12, 13, 14, or even 15% ROI. It happened right here. At this during this period, Zenith Bank was selling for close to 11 to 12 naira. The guys that took advantage of that dip, they have made a lot of money from this stock. So we may see the Nigerian stock market go down in the next 6 months, 1 year, or 2 years, but it doesn't mean that within those periods there won't be any rally. Definitely there will be rally, but the number of stocks that you should be expecting to drive the market may be limited because the market itself, majority of the stocks that are driving the market index have just rejected their major resistance level. So NGS 30 index is actually on its way to the downside. So you need to be very careful if you are trading Nigerian stock at this point because the breakout you see here, the wrong rally you have seen right here is not actually NGS 30 stocks. So you need to take note of this. There are few stocks that have just broken out into their all-time high. One of those stocks is, for instance, look at Wema Bank. Wema Bank is selling for close to 3 to 4 naira. Look at the last time Wema Bank touched that region. So let's go back to Wema Bank stock. So it's just one of them. You can see right here. You can see the last time Wema Bank touched this region was in 2013. You can see it went as high as 5 naira. The second time it touched that region is in 2017. Now you can see how Wema Bank is rallying higher to reach that region of 4 naira 51 kobo. So it's only few stocks that are driving that index. NGS 30 itself, where you have the big boys, where you have the big car company, it has just rejected its key resistance. So that is a sign to watch out for. So if you have funds to invest in either stock market or Eurobond, I would strongly advise that you put that money in Eurobond while waiting for stock to correct, while waiting for stocks to find bottom, because at this period inflation is already at all-time high. Central banks are raising interest rates, and that makes money market a lot more attractive. And one of the best high yielding money market instruments to look at right now is euro bond. So I hope this video have opened your eyes to where you should be looking at going forward. And it doesn't mean that the stock market is no longer profitable again. There are still stocks to buy that will be probably taking advantage of the period that we are. One of them is Okomu. So you should be looking at stocks that sell inelastic products. You can see, so even in that dip, look at how Opomu just broke into all-time high. So there will be opportunities to trade, but it may not be as much as what you've seen in the last 12 months to 2 years. So there will be few stocks to trade, but you should ensure that you adopt an effective capital allocation formula, which is to put majority of your funds in fixed income markets to hedge against inflation until the market recovers. But right now, dollar is surging higher, and it has created a lot of opportunities for Eurobond investor. So this video should be able to help you find a better path to managing your portfolio in the Nigerian market or also in your fixed income market. So I hope you understand where to invest your money right now. Like I said, if you're watching this video for the first time, kindly hit the subscription button, turn on the notification bell for more updates. Thank you.